Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China South Air interim report. China Southern Airlines Company Limited offers a diverse range of businesses and services across various sectors. These include transportation services, airline transportation, cargo, mail, luggage aviation services, aircraft maintenance, ground extension business, civil aircraft type training financial services, asset leasing, engineering management, technical consulting sales and marketing services, aviation material sales, travel agency services, commodity retail and wholesale health and wellness services, health examination services, technology services, internet sales, concurrent insurance agency business, information system integration services, consulting services, socioeconomic consulting, information technology consulting, information consulting tourism services, hotel management, tour services. The company's extensive portfolio of businesses and services reflects its commitment to providing comprehensive solutions for various industries. The recent surge in China South Air stock price can be attributed to several factors contributing to the airline industry's growth. A notable trend is the optimization of supply and demand, driving ticket price increases and profit releases. Additionally, passenger volume has seen significant growth, with a projected 370 million national civil aviation passengers for the first half of 2025, and international flight bookings surpassing 1.4 million. China Southern Airlines' expansion plans also play a crucial role in its stock price increase. The airline has announced over 620,000 flights across 940 routes for the 2025 summer-autumn season, with route expansions both domestically and internationally. Furthermore, China Southern Airlines is scaling up the commercial use of domestically produced C919 and C909 aircraft on major routes. These factors collectively contribute to a generally favorable environment for China Southern Airlines, resulting in its stock price increase. The primary drivers of revenue growth or decline in the given financial summary can be summarized into three main categories. On the growth side, international passenger traffic and cargo/mail carried growth contributed significantly to revenue increase, with international passenger revenue rising by 15.74% and cargo/mail revenue increasing by 4.01%. Additionally, airline transportation segment revenue saw a substantial increase of RMB 83,556 million. On the decline side, Hong Kong, Macau, and Taiwan routes experienced negative growth in both RPK and RTK, with declines of -2.65% and -8.48%, respectively. Domestic passenger revenue also decreased by 1.79%. Furthermore, commission income, hotel and tour operation income, and sales of aviation materials expenses all saw decreases. Overall, the key drivers of revenue growth or decline are largely influenced by international passenger traffic and cargo/mail carried growth, as well as regional market performance in Hong Kong, Macau, and Taiwan. Net income and profit margins. A shift in performance. The company's financial performance has undergone significant changes, particularly in terms of net income and profit margins. Despite a decrease in net income by RMB 2,927 million, the operating profit margin has shown an improvement from 3.2% to 4.5%. This increase can be attributed to the company's ability to manage costs effectively amidst industry risks. However, the net profit margin has taken a hit, decreasing from -0.48% to -0.97%. This decline is largely due to macro environment risks and industry pressures that have affected the company's overall profitability. The contrasting trends in operating and net profit margins highlight the complexities of the company's financial performance, underscoring the need for strategic adjustments to mitigate these challenges. The company is indeed generating positive operating cash flow. This is evident in the financial summary, where it states that the company has been consistently producing a net cash inflow from operating activities. Specifically on page 24, page 65, and page 92, it is mentioned that the company generated RMB 11,674 million in net cash inflow from operating activities for the respective periods. This indicates a strong financial performance and ability to generate cash from its core operations. The company's debt level has undergone significant fluctuations over the past year. Initially, it increased by 2.75% on page 24, but this was followed by a repayment of borrowings worth HK 3 billion, $500 million on page 44. However, by page 63, the debt level had decreased by approximately -4%. The total debt level also saw a decrease from RMB 130.8 billion to RMB 133.5 billion on page 82. Conversely, on page 84, it increased by RMB 21,400 million from 2024. Regarding interest expenses, there was a significant decrease of -10.6% from 2024 to 2025 on page 60, and a decrease of RMB 118 million on page 78. However, on page 82, it is mentioned that the interest expenses have not changed significantly due to a slight decrease in interest-bearing debt levels. Nevertheless, on page 90, there was an increase of RMB 50 million for loans from China Southern Airlines Group Finance Company Limited, Finance Company. The company's financial performance reveals mixed results across various segments. The airline transportation segment stood out as a strong performer, generating significant revenue of RMB 85,185 million. In the China region, other operations segments also showed promise with a profit after taxation of RMB 292 million. However, some areas underperformed. The unallocated segment incurred a substantial loss of RMB 525 million, indicating potential inefficiencies or mismanagement. Additionally, hotel and tour operation income declined from RMB 431 to RMB 390 million, while ground services income increased but from a relatively low base of RMB 244 million. Overall, the company's financial performance highlights areas that require improvement, particularly in the unallocated segment and hotel and tour operations. Management's outlook on company strategy. According to management, the company is well equipped to meet its working capital and future capital commitments with existing credit facilities. To mitigate external uncertainties, the group will focus on key areas such as safety management, operational effectiveness, cost control, and logistics system construction. Additionally, the company's strategy involves holding non-tradable equity securities for strategic purposes, which is expected to positively impact profit growth rates and dividend payouts. Acquisitions and divestitures. Overview. The company has made significant investments through acquisitions to expand its business operations. Notably, the acquisition of Sichuan Airlines Company Limited involved a capital injection of RMB 4.68 billion, resulting in a 39% shareholding interest. This strategic move is expected to enhance the company's presence and capabilities in the industry. The company has a history of paying dividends to its investors. This is evident from two key points: the receipt of dividend payments from joint ventures and associates on page 65, and the consideration of expected dividend payout rates in the valuation process on page 71. These details suggest that the company prioritizes returning value to its shareholders through dividend payments. That concludes the financial summary for China South Air. Feel free to comment below, and I will be happy to answer them when possible.